Good morning, everyone. Welcome to Windsor Brokers Live Daily Market Outlook for Friday, 29th of I do apologize, 21st of September 2012. We are at the end of the week, and well-deserved weekend relax is ahead of us, but still we have whole day in front of us, and a lot of market movements expected to be seen before we close the doors and leave for a weekend relax. The euro has regained some ground as some comments and the leaks of the news that EU authorities are working behind closed door on an aid package to Spain, as well as preparing for an open-ended bond purchases program by the ECB. The Brussels is reportedly helping Madrid to tweak an economic reform plan thought to be announced the next week. According to officials involved in the discussion, the talks between Spanish government and European Commission are focusing on measures that would be demanded by international lenders as a part of the new rescue program, ensuring that they are in place before a bailout formally requested. The plan will also focus on structural reforms to the Spanish economy, and basically this is one of the overnight's and this morning's top headlines. The single currency is slightly higher of yesterday's lows at close to 129.20, finding a temporary footstep, but still overall negative tone in the near term is still dominating, and anticipates a further extension lower. We'll get the details in our technical part, as well as sterling that returns back to the tops after finding a bottom at approximately 160, 160. The easing from the previous 160 to 70 tops was quite shallow. We're talking about 100 pips ahead of fresh strength, but still the strong barrier at 163.00 looms above the price action, and in case we don't see the regain and break above this level, there is a quite strong risk of a stronger reversal of the pair. Dollar yen is near-term sideways neutral mode, correcting, consolidating basically the past 2 days strong losses from 79.20 that bottomed at 78.00, but still the downside is more vulnerable at this point, as near-term studies remain quite negative, and they see more focus on the possible break of 78 support that might be triggered for a return down to 77 support zone, while dollar Swiss brief recovery so far stays capped at 93.50, but possibilities of fresh extension higher and further retracement of the latest down move that bottomed at 92.37 are still existing. Will follow today's action. Of course, we'll get some more details in our technical part. This is just a brief outlook. The crude oil regains some ground after a strong reversal of 100.72 peak of 14th of last Friday's actually peak of the November contract that dipped as low as 90.95, with the current price standing at 93.35. Some prospect for a stronger corrective action is still seen on the lower time frames. The gold is holding its positive tone, but still within the sideways mode, moving within the range, as yesterday's third wave of 1779 fresh high dipped exactly to the levels we projected. 1755 was the low, and the fresh push higher now regains upper levels. 1774 seen so far ahead of 1779 peaks. Neutral tone, I would say, at this point seen for the yellow metal. From today's calendar, again, we don't have much to see. A few events. Of course, the important one is the UK's PSNB public sector net borrowing for August. That is forecasted in quite optimistic figure. 12.7 billion pounds is seen forecast for August release, compared to minus 1.8 negative release of the month of July, and this is basically the only one European release seen for today. The rest comes from America. A leading index from Australia is basically placed at the wrong time due to the time. It was 00 GMT. It seems that system didn't recognize it well and put it at noon. Anyway, it came unchanged at 0 versus the came flat at 0 versus the 0.2% of June's release. And a few releases from Canada. States are out of the game today. CPI from Canada due at 12:30 GMT. August 1 is forecasted at to raise to 0.4 compared to minus 0.1 release of the month of July, while core CPI is also forecasted to tick higher, 2.3% compared to minus 0.1% in July. And finally, wholesale sales from Canada at the same time for July expected to stay flat at 0% compared to minus 0.1 month of June. So basically no significant changes seen, and this is all for Friday. Compared to yesterday's quite busy day now. Regarding the economic indicators, we don't see much, but of course end of the week always brings us some more market action. So we're going to take a look now in the major currencies and the commodities to see what are the expectations and outlooks for major commodities as well as major commodities and major currencies. We start with the single currency as the near-term downtrend of 131.70 that is attempting to confirm the double top at this point is still in the down move despite bounce of yesterday's base at 129.19. Recall we mentioned that case of a break below the previous support zone at 130.00, 129.90, extension down to 129 is anticipated, and basically this is what has followed the market dip to 129.19 ahead of bounce higher. This is still seen as a bearish action. The near-term movements are still seen as a bearish action, as so far the pair remains capped by descending trend line of 131.70, where exactly the recent recovery stalled. 130.02 is the peak. The trend line is at 130.03 with a 55 days exponential moving average limiting gains so far, and also just I do apologize, just ahead of some important Fibonacci levels. I think we put it in the wrong direction. We're going to correct it now. Okay, so the stronger 130's resistance zone so far holds the upside as trend line resistance, reinforced by moving average and the 38.2 retracement of the current down leg from 131.70 to 129.19 keeps the overall negative tone in play. The studies are still in the negative territory, although moving indicators, MACD is moving higher but still below the zero line. Some momentum has been regained, while stochastic is already pointing lower, putting pressure on the current action. In case of a break above this level, this is quite a strong resistance zone at basically the break point 130.00 is seen as a break point. And the break here faces 30.15, 30.45 and 30.74 Fibonacci levels that are coinciding with the previous tops 30.83 and 30.74. And if we see the break above these levels and probably regain of 131, then we'll be talking about focus shifting towards the upside and the end of the current correction. Otherwise, any failure in case of a break above the trend line, any failure under 130.80 would be again seen as a lower top and ahead of fresh swing lower, as the near-term action remains in the downtrend, as also shown in the 4-hour chart studies that are well in the negative territory and still aiming towards the downside. The larger picture, the indicators are now starting to point lower, as emerging out of briefly entering the overbought territory. Also, the brief break above the linear regression channel was the first signal. Currently, the pair is attempting below. There was already a spike below the linear regression line that will open way for a further extension lower. I would say main support 200 days moving average at 128.27. Of course, we have a number of supports closer to the level of 129 comes next, along with 129.19, and then retracement levels 128.35, 50%, and 127.56, 61.8 of the larger up move from 125.00 to 131.70. Certain near-term action is still skewed towards the downside, and more focus seen towards the downside unless we see the break of initial 130.00 and the more important 130.80 zone that will shift the near-term focus towards the upside. From the other side, pardon, sterling regained the ground after finding support at 160.162 as the ground was found at approximately 50% retracement of the latest upleg from 160.74 to 162.72. This is the rally with the approximately 50%. There were a few dips lower ahead of a fresh rally. Still, upside still remains intact as a break above 162.72 is required to turn focus towards our short-term target at 163.00. This is the swing high of 30th of April 2012. Overextended daily studies, although still pointing higher, still see potential for retesting this level, while hourlies have regained the strength, but still short of 162.70 to 162.66 seen so far, although the studies remain in the near term remain quite supportive, with the bullish crossover of 20-55 days exponential moving averages underpinning the current advance at 162.15. I would say the near-term risk is seen on the loss of 162 level that will again weaken the near-term structure and signal possible further retracement, while the main support at 161.62 and 161.50, 61.8% Fibonacci retracement will be seen as a signal. In case of a break lower, will be seen as a signal for a stronger reversal. So far, despite the current reversal, the upside remains firmly in focus. Initial supports 162.15, 162.00, and the break point at 161.60, 161.50 that will sideline bulls in favor of a stronger reversal. As said, for dollar yen, it entered the again consolidative sideways mode with the quite neutral tone seen at this point, though the hourly studies are still slightly skewed towards the downside, as most of indicators are holding below their midline, seeing more potential towards downside. In this case particularly, it's a 78 support, loss of which will be seen as extension of the near-term downtrend from 79.21, where the pair found quite tough resistance. First one is the daily Ichimoku cloud top at 79.25 that limited the gains ahead of 200 days moving average at 79.30. We see this as a strong barrier, and as long as the pair stays below these levels, more risk is seen towards the downside. Of course, a negative tone that dominates on the lower time frames, with the 4-hour chart studies now dipping below their center lines, seeing more potential of further retracement of the initial 77.12 to 79.21 move, with the break below 78.00 as our initial support, and the 77.92, 61.8% Fibonacci retracement seen as acceleration, and refocusing down the downside levels at 77, our previous low posted on 77.12, posted on 13th of September 2012. Overall picture for dollar yen still maintains more negative tone. Most of indicators are in the negative territory with the 200 days moving average, and previously mentioned the daily Ichimoku cloud capping the upside. Break above these levels is required, and break and close above these levels basically is required to improve the current structure, and refocus upside levels at 79.65 and 80.00 as a psychological level. Recent fall of dollar yen again reactivates stories about possible intervention of Bank of Japan, so we should bear this in our mind, as it happened 3 times last year that Bank of Japan intervened when the pair entered the dangerous zone. Last time was at 75.56, if I'm not mistaken. The record low, pardon, at 75.56 was the first one, and then 76.00 was the next. So 76.00, as the pair is approaching dangerous zone, the possibilities of action of Bank of Japan are increasing. And the dollar Swiss, its near-term recovery accelerated, basically of 92.37, accelerated on a break above range top at 93.00, also psychological resistance, hitting so far 93.54, where descending 55 days exponential moving average limited the upside. Basically, this moving average is now turning sideways. That might be a signal for some stronger action as the pair bounces above overnight's low at 93.08. In our written analysis published this morning, I mentioned that it's important that reversal from 93.54 holds above 93.00 as reference support, with the fresh strength at the beginning of European session, now looking for a possible test of 93.54, that break of which would allow for a stronger recovery. The next immediate barrier is 93.67, Fibonacci 38.2% of down leg from 95.67 to 92.37, with regain of a very important 94 zone, where we have 50% retracement. Previous peak at 94.16, and the 200 days moving average at 93.97 is required to turn focus higher and to improve the current structure and confirm the bottom at 92.37. Otherwise, any scenario with that includes rejection and failure under 94.16 will be seen as a corrective bounce, and with risk of a lower top and the fresh extension lower, as the larger picture is still quite bearish, and despite the studies moving now towards the upside on the daily chart, emerging off the oversold territory, regain of minimum 94.16 in this case is seen as a trigger for some stronger corrective action. Otherwise, likely scenario as set would be lower top and fresh extension of the downtrend from 99.70 at 24th of July peak. That will directly open at 92.00 and 91.80, our next downside supports. As mentioned at the beginning, gold is still in the neutral sideways mode of 1779, the latest peak posted 2 days ago, with downside being well protected at approximately 1750 zone, 1752 and 1755 lows seen overnight. This is the latest pattern yesterday. As we mentioned, the wave C of 1779 was projected down to 1750 zone. That exactly happened, and fresh bounce higher still keeps the bulls afloat, of bulls of the larger picture, as the larger picture of gold still maintains a strong bullish tone. So sort of pardon, MACD bearish divergence is seen. Is seen at this point that might be signal for some stronger recovery, while daily studies are now turning sideways deeply in the overbought territory, signaling that the current situation shows the studies are sort of exhausted at this point, and the risk of stronger reversal is still quite high unless the price breaks higher. Our immediate next Our immediate upside target lies at 1790 and 1802. This is quite a strong resistance zone. However, current exhaustion in the daily studies sees potential of some more significant corrective action preceding a fresh rally higher. As overall picture is still quite positive and bullish, but signals of some more significant corrective action keep us caution at this point. Loss of 1750 as our strong support and range floor reinforced on the 4-hour chart by 55 days exponential moving average would be the first signal for possible extension lower, with the trend line support seen at approximately 1715, along with the 1712 50% seen as a trigger for a deeper reversal. And finally, crude oil has recorded the strongest weekly losses, biggest drop in the percentage actually in about 4 months, as the price sharply dipped off 100.72 last Friday's peak. Turning the short-term bullish structure aside in favor of some stronger reversal, as recent dip retraced over 38.2% of the initial 77.27 to 100.72 retracement rally, with the near-term structure still being well in the negative territory. Hourly studies are slightly improved on the yesterday's bounce of 1995 that regained the 93 zone, but gains are still in the near term limited by 55 days exponential moving average on the upside and 20 days one on the downside. Not much potential seen, as despite the break above the midlines, the indicators are now rather in the sideways mode, seeing not much potential for further corrective action. The retracement of the latest downleg from 172 to 1995 seen so far 23.6%, with a more significant break above 38.2% at 94.68, and the previous spike lows at 95 zone seen required to improve the near-term structure for a possible extension higher, while break above 97 would be signal for a bottom at 1995 and turn the focus towards the upside. As said, there's quite negative tone that showed on the daily studies that lost traction, and loss of momentum sees potential for further easing at this point, unless, as I said, initial higher platform, previous higher platform and support now reverted to strong resistance at 94.00. 96.43 200 days moving average and 97.00 level. As long as these levels stay intact, possibility of further extension lower is quite high. Break above 96.47 particularly, and then 97.00 will turn focus up towards the 100 barrier, as current corrective action has so far found ground at 38.2, but repeating a quite negative tone seen on the lower time frame still keeps the downside vulnerable. And that was all from me today. Please, if you have questions, you can submit them now. Okay, the Aussie dollar has been some time to take a look at this pair. As shown on the daily chart, we have sort of range trade, upside limit at 106.20, downside at 101.65, with the recent pullback of 106.23. Seen still as well within the range, dipping down to between 50 and 61.8% retracement, but holding the important 200 days moving average and the 61.8% retracement intact for now. That keeps a possibility of further bouncing higher. Near term, pardon, structure is still negative as reversal of 106.23 dips so far to 103.67, and the latest bounce pardon, stays still under 105 as psychological barrier and previous high. Basically, if we see the break above 105, then we would be talking about a higher low at 103.67 and possible fresh extension higher. Otherwise, risk will be seen on approach and rejection under 105.00. That will be signaling a failure swing and the possible extension lower, while a loss of 103.67, where is also the 103.40, 30.40, the Fibonacci 61.2, and the 200 days moving average could be quite risky for the near-term price action, as this will be signal for further extension lower. Otherwise, break above 105 is set to refocus 106.00. Any further questions, please? No more for today. Okay, in that case, thanks to all of you being with us. I hope we covered all the important points that are useful for your trading. Friday today, not very rich, not very big calendar, but still the end of the week always triggers some at least profit-taking actions, so be aware of this. We are back on Monday at our standard time at 7:00 GMT, local Cyprus time at 10 o'clock. After morning coffee, you come and join us. I wish you a nice day, good and profitable trading, and of course nice and relaxing weekend until our next meeting on Monday. Good luck.